All right. Hello again. My name is Corey. I am a TA in the accounting lab, and I'm here to explain another concept from Accounting 200 that seems to give a lot of students trouble. I remember when I was in Accounting 200, I actually struggled with this quite a bit, and it really frustrated me because it seems like such a basic algebra equation that it shouldn't be that difficult. We're talking about cost, volume, profit analysis, where we classify a company's costs as either variable costs or fixed costs, and we subtract that from how much revenue the company earned, and then we get the company's operating income. However, there's many different ways that this formula can be broken down, and there's lots of different variables, and because the variables are a little new, it causes us to struggle with it a little bit. So I'm going to try to break this down a little bit and present to you a framework that I have found helpful not only for me but also for other students as I've taught this to them in the past. And so we're going to talk about cost, volume, profit analysis. The basic equation is sales revenue minus the costs that we've classified as variable costs minus our costs that we've classified as fixed costs, and that gives us our operating income. Okay, but there's more to it. Sales revenue can be broken down into the price, the sales price that we sell each unit at, times the number of units that we sell. If I sell 100 units for $10 a unit, then my sales revenue is going to be $1,000. Variable costs in total can be broken down to the variable cost per unit times the number of units. So if my variable costs per unit are $5 and I sell 100 units, then my total variable cost is going to be $500. And then we don't really break down fixed costs because it doesn't really matter how many units I produce, those costs are fixed. Let's use rent as an example. I have to pay $1,000 in rent every month. Doesn't matter if I produce 100 units or produce 10,000 units. No, I still have to pay $1,000 of rent every month. So that's just going to be what my fixed costs are. And then we subtract that and we get our operating income. There's also two ratios, and I'm going to provide you an example in a second to help you try to understand this a little bit better. But we have the variable cost ratio and we have the contribution margin ratio. So let's start with the variable cost ratio. Variable cost ratio just says if I sell and get $1, how much of that $1 went towards paying my variable costs. So if this ratio comes to 20%, then for every $1 that I get, I spend 20 cents on my variable costs, and I'm left with 80 cents to then use towards my fixed costs. Well, we define contribution margin as sales revenue minus variable costs. So the contribution margin is what I'm left over with after paying for the variable costs. So this ratio, contribution margin divided by sales revenue, is just 1 minus my variable cost ratio. Again, using that same example, if I get $1 and this ratio is 20%, then I'm using 20 cents to pay for my variable costs, and I'm left with 80 cents to pay for fixed costs. That 80 cents that I'm left with, that's the contribution margin, what I'm left over with. So if this is 20%, this will be 80%. The two ratios are going to add up to 100. So I think that most of the students kind of understand those ideas and those principles, but then they get presented with a problem and they say, what am I trying to solve for? Like, I know the end, but what variables do I need and what variables don't I need, and how am I going to solve this problem? So I'm going to provide you with a simple example and then help you understand which variables we should be looking for. So I'm going to just box this off here. Let's say, so we have our basic equation, sales revenue minus variable costs, and remember that leaves me with contribution margin. And then I use the contribution margin to pay for my fixed costs, which will then leave me with operating income. Okay, so let's say I just have one product and I sell every product for $4. So if I only sell one unit, then I'm going to get $4 of sales revenue. If I sell 2 units, I'll get 8. If I sell 3 units, I'll have 12. If I sell 100 units, I'll have 400, right? This is just, I'm selling them at $4. Depending on how many units I sell, that's going to determine my sales revenue. Now let's talk about variable costs. Let's say the variable cost of my units is $1. So if I only sell 1 unit, then my total variable cost will be $1. If I sell 2, then it will be $2. If I sell 3, then it will be $3. If I sell 100 units, it'll be $100. So again, my variable cost is just $1 per unit. The total variable cost is going to depend on how many units I sell. Now we can just do the math and say, well, then I'm left with contribution margin of 3, or if I sell 2 units, I have a contribution margin of 6. If I sell 3 units, I have a contribution margin of 9. Or if I sell 100 units, I have a contribution margin of 300. Basically, my contribution margin per unit is $3. So for every unit I sell, I get 4, I use 1 for variable costs, and I'm left over with $3 for every unit. So the total contribution margin is going to depend again on how many units I sell. But I want you to try to see some relationships here. It doesn't matter how many units I sell, my variable costs in total are always 25% of my sales revenue. So if I sell 1 unit, then 25% of sales revenue is $1, which is my variable cost. If I sell 2 units, 25% of $8 is $2, which is my variable cost. If I sell 100 units, 25% of $400 is $100, which is my variable cost. So always, no matter how much I sell in this scenario, my variable costs are always 25% of my sales revenue. That 25% is your variable cost ratio. Also, doesn't matter how many units I sell, my contribution margin is always 75% of my sales revenue. So I get $4, I use 1 on variable costs, and I'm left over with 3. $3 is 75% of $4. Same thing here, I get $400, use 100 on variable costs, and I'm left over with $300 to use towards my fixed cost. $300 is 75% of $400. That 75% is my contribution margin ratio. So again, 25% plus 75% equals 100%. These two ratios added together will always equal 100%. So now how does this help you? Well, what you're trying to look for when you solve these problems is you want to find the variables that are not going to change. This is what I mean by that. Let's talk about sales revenue in total. Does sales revenue in total change? The answer is yes. If I sell 1 unit, total sales revenue is 4. If I sell 100 units, total sales revenue is 400. That's not the same. It doesn't stay the same. So I'm not really trying to figure out sales revenue. Okay? Same thing with variable cost. If I sell 1 unit, my variable cost is $1. If I sell 100 units, my variable cost is $100. Total variable cost is going to change depending on how many units I sell. So I don't really care if they provide me with total variable cost. That's not going to mean anything to me if they say total variable cost is $100 when you sell 100 units, and then they say, well, what's variable cost in total when you sell 1 unit? Well, that $100 doesn't really help me get the answer. It does, but what I'm trying to solve for are the variables that don't change, and then I'm going to use those variables that don't change to get the answer. You'll see in a second. So now let's go to fixed cost. Fixed costs in total do not change no matter how many units I sell. So what do I care about? I care about fixed costs. Whether I sell 1 unit or whether I sell 100 units, the total fixed cost is going to stay the same. Okay. Now let's talk about sales price. When we go back to our example, does the sales price change? It does not. Each unit costs $4, or I sell each unit for $4. So when I sell 1 unit, I get 4. When I sell 2 units, 2 times 4 is 8. When I sell 3 units, 3 times 4 is 12. So that sales price of $4 doesn't change. I sell all my units for $4. So I care about the sales price. Now let's talk about units. Does the number of units, could that change? Yes, it could. I could sell 1 unit, I could sell 2 units, I could sell 3 units, I could sell 100 units. So the number of units that I sell is going to change. So let's not worry too much about units right now, which I can actually take out of both instances. The number of units I sell could potentially change. Variable cost per unit. In this example, your variable cost per unit don't change. When I sell 1 unit, that 1 unit costs $1. When I sell 2 units, each unit costs $1 for a total of $2. When I sell 100 units, each unit costs $1 for a total cost of $100. So this I care about. The variable cost per unit isn't changing. Okay. Also, we have sales price. So I'm going to write this in. I didn't put this in before. But your sales price minus your variable cost per unit equals your contribution margin per unit. So there we have contribution margin per unit. I care about this. Again, if sales price doesn't change, it's always $4. And if my variable cost per unit doesn't change, it's always $1. Then my contribution margin per unit, $3, is also never going to change. For every unit, I get $3 of contribution margin. Okay, so we also care about that. Next, we care about our ratios. Remember I said earlier, it doesn't matter how many units I sell, variable costs are always going to be 25% of sales revenue. It doesn't matter how many units I sell, contribution margin is always going to be 75% of sales revenue. So these ratios do not change. So I'm concerned about finding these. So I hope this makes sense, but when you're presented with a problem, and I'm not going to do a problem here, but go ahead and try it, whether it's something that you did from class or from the practice exam, they're going to present the problem to you and they're going to give you some information. You're going to use that information to try to figure out these 6 things. You're going to try to figure out, what are my fixed costs? What is my sales price, my variable cost per unit, my contribution margin per unit? What is my variable cost ratio? What is my contribution margin ratio? Because once I have those things will always apply. They do not change. So then I get those 6 things, or as many of them as I can. You might not be able to get all 6. And then I use those things to answer the question that they ask. So I hope that makes sense. If you're still a little confused, come to the accounting lab. We can walk through a problem with you and help you to understand how, once we find these 6 things, we can then answer the question. So best of luck. You can do these problems. They're not as hard as they seem. I remember struggling with them, but you can figure them out. Great.